Hey everyone, welcome back to Corporate Decoder, where we unbox the financial mysteries that shape our world. And today we've got a filing that might just be hiding a clever little maneuver. Get ready because Modus Holdings Inc. is serving up some interesting moves with their latest Form 8K. And we're going to break down what it really means for the company and its shareholders. Before we dive in, if you are all about cutting through the corporate jargon to get to the real story, make sure you hit that subscribe button. And if you want to connect with other savvy investors and get more exclusive content, join our Discord community, linked right down in the description. So what is the story with Modus Holdings Inc. or AMOD as it is traded? Well, the date of this report is the 24th of October 2025, and it looks like they've been busy making deals. This isn't your usual quarterly report, but rather a current report, Form 8K, which means something pretty significant happened that the company needs to tell the public about right away. Think of it like a heads-up announcement for major events. Modus Holdings is primarily known for its class of common stock, trading under the ticker AMOD, and redeemable warrants trading as AMOD. Both are listed on the Nasdaq stock market, LLC. It is interesting to note they are classified as an emerging growth company, which means they have some flexibility with reporting rules. And they've elected to use the extended transition period for new or revised financial accounting standards. This often means they get a bit more time to adapt to new rules. Okay, let's get to the exciting part. The main event here revolves around an entry into a material definitive agreement. On the 24th of October 2025, Modus Holdings inked some consulting agreements. They brought on Rucus Holdings LAC and Leron Group LAC to help with marketing and sales for their new financial services kiosks. This is a big deal, especially because these kiosks are being rolled out with a major US retailer. This line tells us that these consultants really played a key role. It wasn't just about minor advice, but actively helping the company get its products into a significant retail environment. This is exactly the kind of strategic partnership that can make or break a new product launch. Now, here is where it gets really interesting from a shareholder perspective. To pay for these crucial marketing and sales services, Modus Holdings isn't just handing over cash, they're issuing stock. Rucus Holdings LLC is set to receive 250,000 shares of Class A common stock, and Leron Group LLC will get a whopping 400,000 shares of Class A common stock. This means they are selling these shares without having to go through the full public registration process. They're relying on an exemption, which is common for private placements to sophisticated investors. The report highlights that Rucus and Leron are considered accredited investors and had sufficient access to company information. This indicates the company believes these sales were done correctly and legally without a public offering or general solicitation. So, what does this mean in plain English? Modus is essentially paying for vital marketing and sales expertise with its own stock. This can be a smart move if the company believes its stock is undervalued or if it wants to conserve cash. It also means dilution for existing shareholders. For every new share issued, the ownership percentage of every other shareholder decreases slightly. The sheer number of shares issued to Leron Group LLC, 4 million, is quite substantial compared to the smaller issuance to Rucus. This could indicate Leron Group's role is significantly larger or more critical in the rollout. These agreements filed as exhibits to this report are the actual legal contracts detailing the terms. While we don't have the full text of the exhibits in this summary, the fact that they are referenced means the specifics of the consulting services, the exact payment terms beyond the share issuance, and any other conditions are laid out there. It is also worth noting that some details, specifically about the retailer involved, have been redacted. This is a standard practice to protect sensitive business relationships. However, it does mean we don't know the identity of this major US retailer, which could provide significant context about the potential scale and impact of this kiosk rollout. Knowing the retailer could give us clues about the company's target demographics and market reach. The report is signed by William Alessi, President and Chief Executive Officer. This confirms that the leadership of Modus Holdings is aware of and responsible for these actions. Having the CEO sign off adds a layer of seriousness to the filing and assures that these are official company decisions. So let's step back and look at the bigger picture here. Modus Holdings is making a strategic bet. They are using equity, their own stock, to acquire crucial to market expertise for a new product financial services kiosks. This is a dual signal. On one hand, it shows the company is serious about this launch and willing to pay for what it believes will be game. Changing services, on the other hand, issuing a large number of shares, especially to Leron Group, without revealing the exact details of the retailer, introduces some uncertainty. What does this mean for the company's direction? It suggests a strong focus on growth and market penetration, particularly in the retail financial services space. The success will hinge on how effectively these kiosks are adopted and how profitable they become. The key risks here include the possibility that the marketing and sales efforts don't yield the expected results, or that the issuance of shares significantly dilutes the value for existing shareholders without a corresponding increase in company value. An opportunity, of course, is that this partnership with a major retailer bolstered by expert marketing could be a major win, establishing Modus as a significant player in this niche. My take on this filing is that it is a pivotal moment for Modus Holdings. They are taking a bold step to accelerate their market entry, leveraging equity to gain expertise. The lack of detail on the retailer is a slight concern, as it leaves us guessing about the potential scale of this venture. However, the strategic intent is clear: rapid expansion and market capture for investors. It is important to watch how these kiosks perform once launched and how the share dilution impacts the overall value. We'll be keeping a close eye on future filings to see the financial impact of these consulting agreements and the success of the kiosk rollout. It is a calculated risk, and the next few filings will tell us if it pays off. Alright, that is our deep dive into Modus Holdings' latest filing. What are your thoughts on this equity for services deal? Do you think it is a smart move or a dilution trap? Let me know your opinions in the comments below. If you found this breakdown valuable, please give us a thumbs up. And don't forget to subscribe for more corporate secrets revealed. And remember, our Discord community is waiting for you in the description. Come join the conversation. Thanks for watching, and we'll see you in the next one.